Hey, what's going on, everybody? Welcome to Bonafide Investing, where we talk all things high yield investing, as well as stocks, options, investment ideas, and investment goals in general. If you're new to the channel, welcome. A little bit of background about what we're doing here. I've been experimenting with high yield strategies for about 2 years, and I have built what I call an all weather high yield portfolio that helps me live free from 9 to 5. Covering my bills, as well as maintaining and paying down my margin. Um, Please hit like and subscribe if you like what we're doing here. Again, everything we discuss is not investment advice, not now, not ever. Okay. So please do your own due diligence and your own research. I was a financial advisor at one point, but I'm not responsible for your wins. I'm not responsible for your losses. What I want to talk about today is just everything in the portfolio, the trades, how to use leverage in a high yield portfolio, even around some of the, I guess, high yield holdings. And what I mean by that is I placed some trades today that most of them are about a month out in duration. I bought some calls and puts today. I want to talk about those and why I think in a high yield portfolio, you still need to trade options around even your high yield plays. Okay. What I did, I actually turned on total return for my options component. That way I could just kind of see, where I currently sit with all my calls and puts. Okay. And I've talked about it in the past. I've made videos on it in the past, why I hold my, long puts on QQQ and SPY as a market crash hedge. But I did look at some charts and some graphs over the long weekend. I went through probably 30 to 40 different individual companies and stocks and sectors. And I just decided to place some trades on some high conviction areas that I feel like have the best potential just based off the data, the current data. So what I did was I might have mentioned in the comment section past video that Microsoft, I think, is due for a short-term bounce before headed even lower. That's kind of my thoughts on Microsoft. But we did get down to that 395 range, which I liked. So what I did, instead of buying a call on a Microsoft, I actually bought a call on MSFU. This is an ETF that tracks Microsoft 2x, okay, to the upside. So far less risk, in my opinion. This trade only cost me $170, but I can control 100 shares of MSFU. And over the next month, I expect probably about a 10% bounce in Microsoft. So MSFU hypothetically should bounce about 20%, right? If it doesn't, the worst I lose on this trade is $170. Well, how much can I make? Hypothetically, unlimited, right? Stocks don't go to infinity, right? But if you think about it hypothetically, if MSFU does bounce, if Microsoft bounces and MSFU goes with it, then I hope to lock in that profit over the next roughly month or so. Rig, Transocean, they're an ocean driller. I owned Rig, man, well over 10, 15 years ago. I had some good success with it. It went high and then crashed down low. One thing about Transocean, the stock, what I've noticed over the years is that it has these huge spikes, and then they come back down to this $4, $5, $6 range, almost every time. And looking at some of the charts, it looked like Rig could start breaking out here over the next, few weeks. And this again was a very low cost trade. I think the trade cost me like $60 or something like that. But I'm looking for Rig to bounce at least a double from here, hopefully over the next month or two. And we'll see how this trade plays out. But again, I would call this my spec play. UNG wanted to get back into natural gas around $3. So I did buy a call on UNG, and oils had a little pullback here, and it was down today. So I wanted to jump back into oil. You guys know that I sold my XLE, XOM, and USO calls earlier this month. Took a nice profit there. But again, there's been, what I think some profit taking over the past few trading days. So I do like oil moving forward. As a matter of fact, what I did, I also bought 1,000 shares of XOMO today. This is Yield Max's Exxon synthetic covered call ETF. I bought 1,000 shares at 12.75 today. Want to see how this does moving forward as a high income play. They've been pumping out some huge distributions lately every week. I expect those distributions to drop. They were almost 20 cents a share last week. I don't expect anything near that. As a matter of fact, I expect about 10 cents a share this week. We'll see. It should be announced tomorrow, but no big deal. It's just what I did was I actually sold a little bit of IGLD and IAUI. I think gold is coming down, and I think it's coming down probably to the low 4,000s, and I think it come down into the mid 3,000s. Okay, so didn't mind selling a little bit of IAUI and IGLD, especially while I was up so much in those two holdings. Still dollar cost averaging back into them each and every day. I will not be dollar cost averaging into XOMO. I just want to kind of see what these 1,000 shares do. But what I might also do is trim back some dollar cost averaging into my gold and put a little bit more into IYRI. I did bring up IYRI to 10% for dollar cost averaging each and every day, but I might want to go a little bit heavier in that as well. Markets are all over the place today. The main reason cash flow life is down about 1% is gold. Gold just taking it on the chin today. Just kind of got pummeled. But yeah, I'm bullish on oil again. We'll see. I think there's a lot more reward than risk at these levels, low 60s. Financials, some of the financials. I was looking at some charts on like Bank of America, Wells Fargo, JP Morgan. They looked pretty bearish. So I actually bought a March 27th put on the XLF, which tracks the financial sector. I think we have some downside there. So wanted to, see how that unfolds over the next month or so. PayPal, I've owned PayPal. I've even owned the PayPal high yield ETFs before. PayPal, I was bullish on this back in this when it was in the 70s and low 80s, and it just kind of went sideways. I finally got out, didn't lose anything, didn't make much, but it's fallen back down to about $40 a share. So it's been literally cut in half in probably a year or so. And so I want to play the bounce. I went a little further out. I went out to May. So I'm playing about a 3-month on PYPL, see how, that does. So again, these are just some of the trades I placed today. I think the March expirations I'll watch closer a little bit every day. Yeah. So again, MSFU is especially if we get a quick bounce, I'm going to get out of that quick, see if I can just make a little bit of profit there. But yeah, I'm surprised by the VIX today. The VIX, the market started out really low today. It's funny because the markets were down a lot more than they are now, and I was down much less in cash flow life, which is because I think I have just so many hedges going on right now. But yeah, VXX was up significantly today. I was up, this position was up about $700-800 at one point. So volatility has come down a lot. Still think the VIX needs to go much higher, and I think it will. But if I'm wrong, again, I didn't risk too much on this trade, and I can always roll this if volatility hasn't returned, the closer we get to March 20th expiration. So yeah, I want to talk about, some of these trades. Again, I'm using leverage, right? I'm controlling 100 shares of each of these positions that I opened today for very low cost, right? I think I was all in premiums, maybe around $1,000 for all these positions or so. So to control, tens of thousands of dollars for very cheap, when you're in a high yield portfolio, I think can be very advantageous, especially if you do it responsibly where, I don't chase hypes. I don't chase trends. I like to sell when hype returns, right? I sold silver in January, So again, I want to be selling when I think there's froth in certain areas, and I want to be buying when I think things are just kind of, really beaten down, but have found some support and I think can potentially rally back. So those are some of my thoughts again on why I think options do play an important role in a high yield portfolio, not just buying high yield ETFs. And one thing I wanted to kind of discuss also real quick was if you are just playing the high yield ETFs, if you're not doing options, futures, whatever, one thing I would encourage is dollar cost averaging. Again, not advice, not telling you what to do, but I would always be putting money back into high yield ETFs because you're going to get NAV erosion even on the good ones. And I think it's critical to dollar cost average to offset volatility, right? As well as you're always buying income that way. Okay. So yeah, again, wanted to talk a little bit about that, some of the changes I'm making going into this week, and love to hear your thoughts and comments. Again, please hit like and subscribe, and help support the channel. Hope you got something from today. Have a good day.